This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November 25th, 2011. Our time is 8:39 in the morning Mountain, 10:39 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, you can catch us online on Harold's website, HESradio.com. HESradio.com. It was a strange week. Of course, yesterday in the United States, it was U.S. Thanksgiving, so happy Thanksgiving to everyone who listens to our radio show in the United States via the Internet, maybe out of AM 640 in Toronto. Also, today is Black Friday. You know there's serious shoppers when a lady pepper sprays a group of people to get at an item. There's something seriously wrong. That's extreme shopping, when somebody pepper sprays a whole group of people to stop them from getting the item that you want. I was reading that on the Drudge Report this morning. More serious, though, Harold, it was a week where people are starting to talk about another financial crisis again. In fact, Jim Rogers said, global collapse a done deal. Eric Sprott saying the financial crisis will be a lot worse than 2008. PIMCO's Mohammed El Arian saying that the U.S. economic conditions are terrifying. The Eurozone needs a momentous deal, according to Credit Suisse. Ben Davies saying we're seeing 2008-style crash-like signals. I'll tell you, Harold, it's here we are again, another very, very scary time when it comes to the world, not only geopolitically, we see all the things going on, but economically as well.
Oh, you bet, Randy. It is frightening times, and again, you know, the thing is that 2008 was one of the worst times in history, and the comparisons coming out again are directly towards 2008, so it is a frightening situation. Again, it's something that we really need to pay serious attention to. This is not the 90s anymore when, you know, the U.S. dollar was strong and the economy was strong and the stock markets were strong and everybody was making money and real estate prices were going up. In actual fact, this is the exact opposite, and you really need to pay attention. Otherwise, one blink in the market and there goes your money. You know, the fact is that the markets have been all over the place this week, and it's primarily for two reasons. Number one, it was a short week in the United States with American Thanksgiving. The markets were closed on Thursday, and it's only open a half a day on Friday. So again, with very thin trading, and nobody was really around on Wednesday, you know, the markets are very thinly traded and certainly are trading in a range at this particular point. It's trading at the lower end of the range. Gold right now is actually trading right at around 1,700. There's very heavy support in the gold market at 16.50 and 16 and a quarter. The silver market is trading right at around $31 to $32. Again, where it's been building a very strong base. So the fact is that the markets are down at their lower end of the base, but basically they're still holding in there and trading in the range. And the reason that this is happening is primarily because the U.S. dollar is gaining strength. Go ahead and figure that one out. I know the euro is extremely weak primarily because deals aren't working out in Europe at this particular point, but the run to the U.S. dollar, it makes absolutely no sense. The U.S. dollar is actually in more trouble than the euro is in, so both of those markets should be falling at this particular point. You really need to look back at 2008 to understand what happened at that particular point and what are the potential ramifications going forward if they happen again. Don't forget the Dow back at that point went from 14,000 down to 6,500. You had all commodities sell off also, at least for a short term before they recovered and came back and made new highs. In actual fact, one of the biggest drops in the market at that point was in oil. Oil dropped from $150 down to $30 within the same period of time. That gold dropped from 1,000 to 700, and silver dropped from $21 down to $9. The difference is that gold and silver recovered very, very quickly. The fact is that when you get into these financial situations, you are going to get knee-jerk reactions that are going to make the markets do certain things. You know, the stock markets are very, very heavily leveraged at this point. They always have been for a long time, for many, many years. And when the markets tend to go against these fund managers, they have margin calls, the same as anybody would in commodities, and they have to meet these margin calls within a couple hours. They sell anything that has any value to it in order to raise the money, and that's what we saw in 2008, and that's sort of what we're seeing right now. But again, a lot of the downward movement in the metals at this point this week and last week are directly tied into what's happening in Europe, and the European situation is certainly getting legs. They don't seem to be able to work out a deal at this particular point, and the fact is that we may see several countries in Europe actually go bankrupt. That could be a severe situation because it would impact all nations, in a very negative way. The United States, Canada, Australia, all countries tend to deal, with banks. They're all tend to be interrelated, and the frightening thing is really the derivatives market. The derivatives market, again, are very, very complicated. Most people don't even understand them, and the bottom line is that they're tremendously heavily leveraged and very difficult to get out of. And when these banks get into the trouble that they're in, the bottom line is that these derivatives start to unwind and they can wreak havoc on the markets. So again, at this particular point, it's a time to be extremely conservative. Now is not the time necessarily to speculate because, again, you've got the markets almost directionless at this point. Now, again, I'm still very, very bullish on gold and silver. There's no way that I see these markets staying down. They're right now trading within their range, but there are major factors in the market that we've been bullish on for a long, long time, and they're still very heavily present in the market, and that is inflation. And all of these situations that are going on in the world at this particular point, the situation in Europe is inflationary, the situations in the U.S. are inflationary, and the situations in the Middle East are inflationary. What's happening, obviously, in Europe is that when these countries go bankrupt, and we're including France now, which is the second largest economy within Europe, the fact is that they have no money, and they lose their credit rating the same as any of us would when we go bankrupt. So the fact is that when a country goes bankrupt, not only does their standard of living drop substantially, but in this case, they're probably going to have to go back to their old currency, meaning that the Europeans are not going to be on the euro, they're going to be on their own currency. And the fact is that these currencies will be so heavily devalued because they're going to have to print so much money to pay off their debts. And we all know that when you print and create money, it reduces the value of your dollar and brings on high inflation. Well, that's happening in Europe. It's happening in the United States. We know how much money they're printing in the U.S., and there's major problems in the Middle East. There's wars going on and demonstrations, and things are not looking good in the Middle East. And obviously, one of the biggest concerns is what's going to happen with Israel, the United States, and Iran. And there is strong possibilities that something could come to the forefront within the foreseeable near future. Right now, oil is trading right at around $100 a barrel. That could cause oil prices to go to $2 to $2.50, which again is one of the most inflationary situations we could be looking at. So again, we're heading into very, very difficult times. For most people, extremely confusing. So again, number one, you've got to listen to the radio show constantly to be updated as to what's going on. Number two, you've got to look at our newsletters. Randy does an amazing job. He digs and he finds the important news that you need to make an intelligent business decision. And basically, we do not charge at all for our newsletters. We want the listeners to our radio show to be informed and to be able to deal with what's happening at this point and what's coming in the foreseeable near future. The other thing is that our seminar in Edmonton is coming up on Monday. We're looking very much forward to all of our Edmontonian friends to be at our seminar at the West Edmonton Mall at the Fantasyland Hotel on Monday night at 6:30, and we're going to go over into detail everything that's happening in the world markets at this point and what we need to do to protect ourselves and to profit by it if that's a possibility. So again, we're looking very much forward to coming to Edmonton. We are videotaping this seminar, and we are going to put it on DVD, and everybody who cannot attend the seminar will get a copy of the DVD for free, and you'll be able to see everything that we're discussing, what we're concerned about, what our predictions are going forward into 2012, and we have some very strong predictions that you're definitely going to want to see. So again, we're very much looking forward to coming to Edmonton to do our seminar. On top of that, we will be coming to Toronto, which is my hometown. We'll be coming to Toronto in the springtime. But in the meantime, again, stay tuned to the radio show and get the newsletters, because the news is changing very quickly. One day the market's up, the next day the market's down. And it's not only, the stock markets and commodity markets, the bond markets are all over the place. place. It's almost like these markets are just looking for direction and can't find them. One day there's a deal working in Europe, the next day the deal is off. One day the stock market's up 400 points, the next day it's down 500. One day gold's up $100 or $50, the next day it's down. So again, until we get a direction as to what's really happening in Europe, these markets are going to trade as they are, and they're extremely volatile. But again, I think we have a good handle on what's going on. And again, you definitely want to come to the seminar on Monday if you can. Again, for those of our friends in Toronto, we will be sending out the DVD to you so you can be privy to what we talked about in Edmonton. And again, I'm looking forward to coming to Toronto in the springtime. So again, all in all, these are very difficult, confusing, and dangerous times. And again, 2012 certainly looks to me like it's going to be one of the most trying years we've ever had. 2008 was bad, but there's a lot of brilliant people that are comparing 2008 and 2012 to be almost an identical market, and we have to go back in time and look at what happened in 2008 in order for us to go forward.
Well, I was born in Edmonton, but I was conceived in Toronto, if that means anything. Too much information, I think. Too much information, okay. To invest in precious metals, the telephone number, 1-866-623-2002, 1-866-623-2002. Their website, Worldwide Precious Metals website, www.pmc.com, www.pmc.com. That is the only company Harold recommends you use when it comes to investing in precious metals. They will be in Edmonton Monday, and they'll be a part of Harold's seminar. We look forward to it. This week found an interesting quote from Oakley R. Bramble. He said, gold bears the confidence of the world's millions, who value it far above the promises of politicians, far above the unbacked paper issued by governments as money substitutes. It has been this way through all recorded history. There's no reason to believe it will lose the confidence of people in the future. And as I was starting to put together what I was going to say at the seminar, one of the things that really struck me is that as long as the politicians in Wall Street keep doing what they're doing, gold is going to continue to do very, very well for many, many years. There's just no getting around it. Richard Russell, and we wish Richard Russell well. He fell down in the bathtub and broke his hip, and he is 87 years old. He is recovering. He's done the Dow Theory letters for over 50 years. So get well, Richard Russell. He had a couple of comments, even though he's getting better. He a little bit down, getting better. He had some comments on the gold market. He said, the gold skyrocketing phase still lies ahead. Day after day, everyone asks whether gold is topped out. Nobody ever asks whether the market has topped out. Think about it. We're in a low inflation, low investor fear environment, a dollar that appears to have bottomed and is now firming, and still gold holds above $1,700 an ounce. This is a remarkable performance aided by heavy buying in China, India, and Asian nations. But what happens when we hit the inevitable inflation, when investors' fears are on the rise? To conclude, gold is holding well in an environment that is not bullish for gold, but in due time the environment will turn highly bullish for the yellow metal. Do not time your gold purchases. Simply continue to accumulate gold. The skyrocketing phase lies ahead, maybe 1 to 3 years. He also went on to say in another commentary, my advice, we are closer and closer to what I call survival period. The period where the magic of compounding turns into what will be the poison of compounding. This isn't a time for timing. This is a time for action. Reduce your exposure to bonds and all items that provide fixed interest rates. Similarly, reduce your exposure to stocks except gold miners. Look to expand your positions in inflation-protecting assets, especially gold. Those who are holding stocks in hopes of the unusual rebound are going to be terribly disappointed in the years ahead. This bear market is going to be unlike anything we've ever seen before. In the end, my survival vehicle will be gold. I'm saying again, timing is hopeless. Gold will have purchasing power and true wealth, as almost everything else will be destroyed by this unprecedented bear market. The U.S. government is now loaded with ever-growing debt that has become a mathematical freak. we return to different times. When interest rates rise, it's going to eat up the U.S. government. With $55 trillion in assorted debts, the U.S. is in no shape to deal with rising interest rates. We are in a state of reverse compounding, leading to inevitable bankruptcy on a massive scale. And I agree with Richard Russell, Harold. I think now is the time just to accumulate precious metals. Sit back and slowly accumulate over time. Don't worry about the ups and downs, the daily ups and downs. Just have a long-term view of where we see things coming. And he's in agreement with you. He sees inflation coming down the road.
Well, I'm glad he does, because there is absolutely no doubt in my mind that that's coming. It's here. In most cases, in India, they've got inflation of 9%, and they've got almost the same in China. So as far as I'm concerned, inflation is right around the corner here in North America, and it's definitely 100% going to be rampant in Europe. So that's what we're gearing up for, and that's what you should really be gearing up for. And again, don't be trading the markets in and out. If you're trading gold and silver and watching it every second, you're going to go out of your mind. The idea is to buy and hold. The idea is that this market over the longer term is going to continue to go substantially higher. We're in the probably halfway through the 10-year bull market that we've been in so far, and the next 5 years should be extremely strong. What I personally see is that 2 years, for the next 2 years, the U.S., the Federal Reserve, will keep their interest rates extremely low, close to zero. There's no growth happening in the United States. There's no new jobs being produced, and the fact is real estate prices are not going up. So the chance of the U.S. actually recovering financially at this point is slim to next to none, because you can't recover when the middle class, when the major part of your population is in such dire straits. And the middle class lost their money in their homes, lost money in their stocks, and have no jobs. So there's absolutely no chance that the U.S. is going to recover at this particular point. What's going to happen after the 2 years of keeping interest rates at zero, that there's going to be absolutely no growth. They're going to have to come out with quantitative easing within the foreseeable near future just to try to put some more money into the economy to try to get things going. But again, it's fairly simple. Without jobs, without real estate prices going up, there is no chance that the country is going to go through a recovery. And what's going to happen after the 2 years is going to be extreme, because of 2 more years of keeping interest rates at zero is really going to bring the dollar down substantially. And what that's going to do is bring on high inflation. Year 3, 4, and 5 is when we anticipate that the prices are going to go ballistic in precious metals, oil, and all of those financial markets that are inflationary. So again, the most important thing at this time is that if you're not in the hard asset market, you should get something into there at this time. Gold prices are low, silver prices are low, and again, we do not anticipate that the prices will stay at these levels very much longer. In fact, one day you're just going to wake up and see the price of gold up $100, $150, and silver be up $2 to $3, and we'll start chasing after the market. We don't want to do that. You want to be in the market, because you never know what's going to happen that's going to cause these markets to jump up, and the last thing we want to do is chase after them. We want to have our major positions in the market prior to the markets running.
There's only one company Harold recommends you use when it comes to investing in precious metals. They've been in business the entire time this bull run in precious metals has been ongoing. They've been all through the ups and downs. They have the knowledge to help you out investing in precious metals. They haven't just started up here in the last little while or joined a bandwagon here in the last little while. They've been there from the very beginning, back in 2001. The telephone number to invest in precious metals with Worldwide Precious Metals, their website, wwpmc.com, telephone number 1-866-623-2002. You can get our free weekly newsletter from them as well. We'd be happy to send it out to you free of charge via email. 2 articles I wanted to mention to you that you should read, must reads in the newsletter. Bud Conrad, Is Gold Still the Answer for Investors? And there are some fantastic charts in that article. Also, Jeff Clark, Don't Sweat the Correction in Gold. And he actually goes back over time and takes a look at some of the past corrections in the gold market. And he says, don't worry about it one bit. Also, another article that is a must-read, the Aiden sisters. And they have incredible, obviously, skills when it comes to predicting the markets. They've proven it in the past, and they continue to do it. They say gold is still good. And there's lots of charts in that article as well. If you'd like to get on the list for our free weekly newsletter, it is a must-read. It's the companion to our radio show. And the way I can describe it is, this is the game plan that Harold and I go off of as if we were a football team. We go into the game, and this is our game plan. You'll get a chance to read the same material we're reading for the radio show. It's our game plan. It's not some glossy, fancy thing, but it's a quick, easy read. You can go through it in 10, 15 minutes, and you can be completely up to date as to the important issues of the day that are musts when it comes to not only protecting your money you have, the capital, but making money off the capital you have at the same time. You can speak with Worldwide about getting our newsletter, 1-866-623-2002, wwpmc.com. But I would say that the newsletter is a must-read on a weekly basis, and some of the charts we have this week are off the charts, if I can use that cliche. They are definitely worth checking out. Also, on the sovereign debt side of things, this was one of the big stories that I wanted to mention. Before we get to it, a couple of quick notes. Portugal's credit rating was cut to junk by Fitch. So here we go. Portugal, their credit at junk. Japan may be close to a downgrade, according to the S&P. France's AAA rating status in tatters. Investors aren't waiting for the S&P or Moody's to downgrade France. Basically, they're asking for an extra yield when it comes to France putting out bonds and people buying them. They want an extra yield. Angela Merkel rejected Euro bonds again, and that caused a lot of turmoil in the market. But the big story was, Harold, German auction disaster stirs crisis and contagion concerns. Germany failed to get bids for 35% of their 10-year bonds offered for sale Thursday, propelling borrowing costs in Europe higher and the euro lower on the concern that the region's debt crisis is driving away investors. This auction is nothing short of a disaster for Germany, according to Mark Grant. He's the managing director at Southwest Securities in Fort Lauderdale, Florida. If the strongest nation in Europe has this kind of difficulty raising capital, one shudders concerning the upcoming auctions of other European nations. And that's one of the reasons why people are very concerned about another financial meltdown, Harold. And the reason the concern is there, and we have about a minute left, is when people don't come in to buy the bonds, the rates that they have to offer continually have to go up, and that's why people are concerned about Spain and Italy and Portugal, that they're having to roll the bonds over from lower rates to much higher rates, and they can't sustain those higher rates. It's another crisis that's building.
Exactly, and Germany is the biggest economy in Europe, and France was the second, and both of them now are in trouble too. So again, this European situation is getting legs. It's a very frightening situation. It's something we need to pay extreme attention to, and obviously, it's affecting the markets in a big way because there's so much uncertainty. We'll certainly talk about this more, but that's something that you really need to pay serious attention to, is what's now happening with Germany and France, two of the biggest economies in Europe.
The telephone number to invest in precious metals, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com, wwpmc.com, telephone number 1-866-623-2002. Well, Monday came around, and there was an auction Monday, and we are going to talk about that auction from hsfineauctions.com. Well, I'll give you a little bit of a hint. It was a massive success. We'll talk about diamonds as well as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November 25th, 2011. Our time is 9:04, that is Mountain, 11:04 Eastern. Radio show runs on 630 CHED in Edmonton. Also AM 640 in Toronto. And I should mention, if you ever miss a radio show, the shows are archived on Harold's website, hesradio.com, hesradio.com. If you would like to receive our free weekly newsletter, we send it out every week free of charge via email. The telephone number is 1-866-623-2002, 1-866-623-2002 to get it. The website, wwpmc.com. The same number and website for investing in precious metals. There's only one company Harold recommends, that is Worldwide Precious Metals. On the diamond side of things, Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. On the diamond side of things this week's featured diamond is a very large 2.13 carat pear-shaped fancy pink. Very few large pinks exist today. Pear shapes are very, very popular for resale, and Harold highly recommends this diamond. You can see the video on his website, rarecoloreddiamonds.com. Click on the featured diamond of the week. When I watched the video, this thing is massive. This diamond, I went to click on the video and I was like, whoa, this thing is huge. You're definitely going to see an amazing diamond when you take a look at the video on Harold's website. Lawrence Graff said this week, I think prices of large quality diamonds will get stronger and stronger because there's a limited amount of them. He also said this week, if 10% of China's 1.3 billion population bought diamonds, there would be none left in the world. He added that the lack of supply concerned him, given that no new mines had been discovered for 10 years. As such, he believes diamond prices will continue to go up. Well, the Chinese community tends to prize gold. Graff believes mainlanders will take up the Western custom of buying diamonds for weddings or engagement rings. A diamond is a family treasure, as it can be passed on to children and grandchildren. Diamonds would be the last thing that you would throw away. Two other stories we have for you in our newsletter. You can get the newsletter from Harold. You can connect with him at 1-800-432-1022 or rarecoloreddiamonds.com. Pink diamonds find new best friend. China's rich. There's a video that goes along with that. They're investing, obviously, in stocks and bonds, but they're moving into pink diamonds in a major way. You can see that video. Also, Dubai is diversifying into diamonds. The world's fourth largest oil exporter and home to gold trading hub, Dubai is rapidly becoming a force in the trade of diamonds. Harold, you know, we should touch on, obviously, something that was super, super important this week, and that was your auction. HS Fine Auctions had an amazing, amazing first auction, but it's an exciting time for diamonds and your website, HS Fine Auctions. Very, very exciting auction results Monday night.
Well, thank you very much, Randy, and it was extremely positive and exciting. Again, it's something that we made history, literally, because nothing like this has ever been built before. Again, it's taken us 2 years to build it. I had this idea many years ago of creating a secondary market to resell high-end investments, collectibles, and basically it's never been done before. If you look at eBay and other auction sites, you know, to me they're boring. There's no selling, there's no excitement or enthusiasm. You know, you can't really see it in its beautiful state. So my idea was to create a live auction site. And the fact is I work with some amazing people in Vancouver, Relentless Technologies, and along with them, after 2 years, we finally kicked off last Monday our amazing auction site, and it was a gigantic success. We just really kept it small, didn't really advertise it that heavily, but we had 10 items up for bid, a beautiful silver set, 10 ounces of beautiful silver coins. We had one of my own personal gold sets. Both of those sold at extremely good prices. We had a beautiful 2.5 carat hard emerald cut. That's emerald from Colombia, very, very high level Colombian emerald. That sold. A beautiful blood red ruby sold. So did a beautiful 4.5 carat magnificent deep blue sapphire. And then the pièce de résistance, why most people showed up, was for the 6 Argyle pink diamonds that were auctioned off, and everybody was ecstatic. So every single thing sold, all sold at very good prices. The buyers were very happy. The sellers were very happy. Everybody made profits, and that, to me, was what I really wanted to set out to do. So again, we built this amazing live auction site. I conducted the auction. It was live. and it was so exciting, and everybody who attended really had a great time, really had great things to say about it, and again, we made history. We were the first company to resell these type of diamonds on a live auction, and again, this is a major business now. This is something that we've worked on, put a tremendous amount of money in, and I really built this primarily for my clients. I built this for my clients to be able to sell their diamonds down the road when we are ready to. However, obviously, we're in such a bull market in diamonds at this particular point. Colored diamonds, pinks and yellows and greens and blues. All these diamonds are going through the roof financially, price-wise. And again, I couldn't be happier because this is something that I brought to the forefront 6-7 years ago on our radio show, and the price of colored diamonds have nothing but gone up in value, and again became one of the most important assets with this decline in the world economy. So again, we're very, very excited about it. We have proved to everybody that we can resell your diamonds, and we're the only company that can do that. If you're investing in other diamonds through one of our competitors, those that are following, trying to copy us, let them try to copy this site, because, again, I doubt that anybody could copy what Relentless built and what we were able to do, and we will only offer these services, these auction services, to our own clients. We will not auction off diamonds that were purchased from any of our competitors. And again, that's something that you should be very, very concerned about. One thing is being in the right market. It's another thing to be able to sell it at a very good price, and that's something that we take tremendous pride in. So again, history was made last Monday as we sold 6 Argyle pink diamonds, all at fantastic prices. The buyers were happy, the sellers were happy, and I got to say, we were ecstatic that it went off without a hitch. The site worked beautifully. We will have another auction coming up within the very near future. Again, none of my clients are selling, so what I've had to do is go into my personal stash of diamonds that I bought many years ago and brought them to the forefront, and again, those were the diamonds that we offered last week. Now, the diamond market is on fire. As things are happening in Europe and the Middle East and in the United States and all over the world, diamonds are about the safest investment that you can make. They don't trade up and down like commodities and stocks do, because they're not traded on exchanges. They go up by about 25% a year. There are 2 sets of diamonds classes that we recommend. One are yellow flawless diamonds, and the other are Argyle pink diamonds. The yellow flawless diamonds, basically, they're extremely difficult to get. They go up by 25% every year. They have for 30-some-odd years now. They never, ever decline in value, because there's so few of them available. It's literally impossible to flood the market with them because so few exist. There's not been a new mine that has been open for the last 15 years that produce any colored diamonds of any quantity. So again, we know that this is an asset that has a supply and demand issue. The demand is extremely high because people are so concerned about their money and losing their money that they want to put it into something safe. And that, again, is rare colored diamonds. So again, we're recommending the yellow flawless diamonds for a few reasons. Number one, they're very, very rare. And of all the colors of diamonds that are available in yellows, the faints, the very lights, the fancy lights, we very seldom sell any of those. We deal with the 3 highest colors, which are the fancy yellow, the fancy intense yellow, and the fancy vivid yellows. And they've got to be internally flawless. And those are the diamonds. Again, they go up by 25% a year. They double every 4 years in value. But here's the exciting thing. During times of high inflation, for example, in 1979-80, when inflation went into the double digits, do you know that when gold went to $850 and silver went to $52, colored diamonds, these yellow flawlesses, went up 500% in 2 years. We feel we're going to have the same type of market condition. So basically, a diamond you could buy today for $20,000 could be a $100,000 diamond in the next 5 years, and that's what we anticipate is going to happen. Now, I've spent a tremendous amount of money on yellow flawless rough diamonds, and we just had them cut and polished and sent to Gemological Institute of America, known as GIA. We sent them to New York. They've all been graded, cut and polished, and they're all available and will be on the website over the weekend and ready for the seminar up in Edmonton. Again, these are just outrageous diamonds, and we've got some princess cuts and rounds and emerald cuts coming in, the very exotic cuts, and these diamonds go up tremendously. Again, they never, ever go down in value. Most of my clients that invest in colored diamonds, mostly the yellows, they put them away for retirement. again, you certainly cannot trust your retirement savings plans anymore. If you're sitting in mutual funds and those type of things in your stocks, the chances are you'll never recover and never retire. And most of my clients are very conservative, as am I. Again, we do not take risks, and this is an asset that will do tremendously well for you. And during times of high inflation, again, if you're not hedged for this oncoming inflation that's coming with record oil prices, record food prices, and again, weak dollars, you're going to find that inflation is going to eat you up, because as inflation goes higher and food and oil prices especially continue to climb and climb and climb, if you don't own an asset like a diamond or gold that goes up during times of inflation, you're going to get beaten up in the market. Your assets are going to be worth less and less and less. My strongest recommendations are to get something into the diamond market. And again, if you're sitting in mutual funds, you're not going to make any money in the stock market for the next 4 to 5 years. And the fact is that take some of that money and put it into a safe asset that, number one, if you need it, it's there for you. We've proven with our last auction that we can sell your diamonds at auction. We're the only ones that can do that. So again, we're extremely excited about what's happening. I've been in the diamond business and the investment business for 35 years now. I've been through the run-up in metals and in diamonds and the inflationary markets back in 1979 and 80. So I've got the experience to trade them, and I was there when diamonds went up 500%. And now that my clients primarily own these yellow flawless diamonds, we've got them put away in the next 5 years, should be the biggest returns on investments that you've seen with complete safety. These diamonds never, ever go down in value. The other diamonds that we recommend very highly are the Argyle pink diamonds. Just like Randy brought up just a few minutes ago, the Chinese and the wealthy are buying pink diamonds like they're going out of style. The fact is that most Argyle pinks, or most pinks, come from the Argyle mine. They produce 95% of the world's pink diamonds, and we know that the mine is going to close before 2018, which is only 6 years from now. Give it 2 years for these diamonds to run out, and we anticipate that the price of pink Argyle diamonds will increase by 10 times what today's prices are, meaning a $30,000 pink could be a $300,000 pink over the next 10 years, and we do anticipate that that's going to happen. And the beautiful thing is that we sold 6 pink diamonds at auction just last week, so you know that we can resell your diamonds for you. It's a very, very exciting time. The diamond that's up for auction today is not an Argyle pink. Not for auction, I mean, as a featured diamond. However, pink diamonds, the larger ones, do not come from the Argyle mine. They come from South Africa, India, and parts of South America. And these are these amazing diamonds that sell for absolute fortunes at auction, because there's no large pink diamonds around. And when, by some fluke, if one does come up for auction, they sell for extreme record prices. So to own a 2-carat, pear-shaped, intense pink diamond, nearly impossible to get at this particular point. And again, we're wholesale. We sell to our clients at wholesale prices. We look to make our money when you sell your diamonds, down the road. We get 10% of the profit if you sell your diamonds to us, and that's what we look to do, is make our clients money in the diamond market over the next 5 to 10 years, and then sell your diamonds for you on our worldwide auction site. We look to make money on the diamond for you, and if possible on the currency for you also. So again, these are extremely exciting times for our clients. We've made the move. We bought these diamonds. I've invested between Argyle pinks and these yellows $9 million in rough diamonds. We bought 2/4 of Argyle's rough diamonds, cut them, polished them, sent them to GIA to be certified. These are all laser inscribed diamonds, the diamonds that you want to own, and we're the only firm that has any quantity of them whatsoever, and that's because we're coming to Edmonton and eventually to Toronto, and we only offer these diamonds primarily to our Canadian clients. So these are the most exciting times in a very troubling time in the world economy. And again, what you need to do to get through these extremely difficult times, history will prove it to you, is get into the hard asset market. Gold, silver, diamonds, tangible assets that you can hold on you, that you own outright, that you need to own. because, again, with the currency markets going under, the euro may not be here by next year. The U.S. dollar is in big trouble. There's massive inflation coming, and there's very, very few assets that will respond to the inflation that we're talking about. I've been through this before. I've seen the rallies in gold and silver, and I've been involved in them before, and that's why 10 years ago we were able to predict accurately that gold was going to go from $250 to $1,900, and silver was able to go from $4 all the way up to $50. We also predicted that the price of diamonds would skyrocket, and that's exactly what they've done. Again, we've built our auction site. We're the only company that can resell your diamonds for you. That's one of the major reasons why you want to deal with us. The other thing is that I put my money where my mouth is. If I'm recommending diamonds and I'm owning diamonds myself, again, I put up a tremendous amount of money to make certain that my clients and the listeners to our radio show are in a position to make money over the next 5 to 10 years in diamonds, and you're going to find that the diamonds that we have are the diamonds that you want to own. The yellow flawlesses and the argyle pinks are the extreme diamonds. Now, we also have, and I've invested heavily in orange diamonds, in blue diamonds, in green diamonds, in gray diamonds. So we've got diamonds coming up within the foreseeable near future that will absolutely shock the diamond world. But again, this is the future of the hard asset market. It's an asset that never falls in value, so there's no risk to it. And the fact is that when these diamonds go to auction, they go for a literal fortune. So we're very excited about what's happening in the diamond market for our clients, but with the upcoming problems in Europe, U.S., and the Middle East, it's probably one of the most important assets you could ever own. Go to our website, rarecoloreddiamonds.com. Look at our rare colored diamonds. Go to the loose diamond section. Look at the yellows, the fancy yellows, fancy intense, and fancy vivids, and then go to the pink diamonds and look at our magnificent argyle pinks. And for those that are in a position to look at the featured diamond this week, it's a video of one of the most beautiful 2.13 carat fancy intense pink diamonds in existence today. Very, very few of them exist, and that diamond will make a fortune over the next 5 to 10 years. So again, we're heading into extreme times, and history has proven that gold, silver, and diamonds, mostly colored diamonds, do the best during these extremely confusing times.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. If you'd like to take a look at his auction website, just for purposes in the future when we have future auctions, it's hsfineauctions.com, hsfineauctions.com. rarecoloreddiamonds.com is his website. You can see the featured diamond. Telephone number to connect with him, 1-800-432-1022. And if you'd like to receive our free weekly newsletter, Harold will be happy to send it out to you as well. One thing that I thought was very, very important this week, Harold, and it doesn't just relate to diamonds, although it came to mind more so with diamonds than precious metals, is the MF Global situation. Here's a company run by John Corzine, who used to be the former governor of New Jersey. They have a great governor there now, Chris Christie. Here's a guy who used to be the former governor of New Jersey. He's running MF Global. I believe he was with Goldman Sachs before that. And this company has collapsed, and they're saying that the missing money may exceed $1.2 billion. There was money that was intermingled, double the previous estimate, $1.2 billion. James Turk came out this week and said that the MF Global disaster could create another Lehman crisis. But this goes back to what we've talked about for quite some time, and that is you need to have hard assets in your pocket. A diamond on your finger, in a safety deposit box, in your pocket. These people, and obviously they're innocent until proven guilty, but it does not look good when you have $1.2 billion missing. They cannot steal your money when you have it in your pocket. They cannot steal your money if you have gold and silver and diamonds. It's just that simple. A lot of people, because of MF Global, Harold, and we have the articles in our newsletter, are so frightened about the financial markets as a result of this and the transparency and what is going on. They're just pulling out. They're just getting the heck out and having their money into just cash because they just don't trust anybody anymore. And you've got the politicians. You can't trust them. Then now we have the MF Global situation. It's not another Bernie Madoff situation.
you know something, there's no credibility in these U.S. markets anymore. I'm shocked that anybody puts their money into those markets, Randy, because you're 100% right. It's beyond ridiculous. $1.2 billion stolen out of segregated accounts. Those are accounts that are untouched. You cannot touch those. Those are like, you know, the escrow accounts from a lawyer. And the fact that these guys were able to steal and take that money just goes to show what's happening in these markets in the United States. Whether it's the SEC not policing, you know, the stock markets with Bernie Madoff and all the other Ponzi schemes that has gone on, you know, within the United States over the last few years, and now you've got it in the futures market that they can actually walk away and steal 1.2. And how stupid can these people get? They all have to know that they're going to jail, but the fact is that people get so desperate at times, and they do things that are illegal, and they deal with the ramifications afterwards. But again, that was unconscionable, and my feeling is, why would anybody want to put money into those markets when there's enough risk just trying to pick the market correctly and do the right thing, and then all of a sudden, you know, you do the right thing and then your money's stolen anyway. So that was an unbelievable situation. Again, it really shocked me, but then again, nothing shocks me anymore, because again, we're in such desperate times that these billionaires and these multi-millionaires, they get into financial trouble and then they steal your money and then they end up going to jail. I don't know what the thinking is, but it's just way too risky, because the risk alone is trying to pick the markets correctly. Then you have to worry about somebody stealing your money. The SEC, the Securities Exchange Commission in the U.S., is a totally useless organization, and so is the Commodity Futures Trading Commission. You know, these people, I don't have any idea why they even show up to try to do their job, because they're not doing a good job for anybody. They don't police the markets correctly. Otherwise, these scams never would have happened. Bernie Madoff, I mean, was doing that for decades, and the SEC never, ever audited this guy. How in the world, I mean, you're supposed to have audits every year to 2 years maximum. How in the world did they not know that this guy never placed a trade and took over $6 billion of investor money? This is what the problem is in the United States at this point. They're just not paying attention. And again, myself personally, I would never put a penny of money into the U.S. stock markets, and now, again, the U.S. commodity markets are suspects. So it's just an unbelievable time. And again, Randy, the more desperate that people and countries and political leaders get, these are the type of scenarios that actually happen. So it's extremely concerning. Again, that situation is huge news, and again, it just goes to prove that when people are pushed up against the wall, they'll do anything, and if it's illegal, it just doesn't seem to stop them. So again, it's just a horrible situation and lends no credibility to the U.S. markets whatsoever.
No, very serious situation, but that's why it's important to have hard assets. And Harold has warned us for over 10 years, don't be involved in futures contracts. He said it so many times, it's ingrained in my head, but don't be involved in futures contracts, and that's what MF Global was involved in. To invest in precious metals, 1-866-623-2002, 1-866-623-2002. The company Harold recommends you use, Worldwide Precious Metals, Canadian company out of Vancouver, been in business the entire time this bull run of the bull market in precious metals has gone on. 1-866-623-2002, website www.pmc.com. Harold's website for diamonds, rarecoloreddiamonds.com, rarecoloreddiamonds.com, or 1-800-432-1022. You can get our free weekly newsletter from either Harold or Worldwide. Gold will shine at $3,000 an ounce, according to Superfund Financial. The crisis, which is happening in the world right now, global crises, and now emanating from not just the Eurozone, but other countries as well. According to Johan Santer, who's the Chief Operating Officer of Superfund Financial India, from the commodity space, he is very bullish on gold and advises his investors to remain invested in the yellow metal. He expects $3,000 an ounce in the next couple of years. Jim Rickards coming out this week as well and saying that pullbacks in gold are meaningless. And he goes on to say that we could actually see, if you can believe it, $10,000 to $15,000, even $20,000 gold. He says, we all like our investments to go up, but if you buy gold at 17 and it goes to 15, buy more because it's on its way to 2, 3, 4, and higher. The fundamental story for gold is completely intact. In fact, it's getting stronger. Get our newsletter this week. It's a must-read. 1-866-623-2002. Speak with Worldwide about the newsletter or Harold at 1-800-432-1022. And Harold, we have about 30 seconds left. Looking forward to the seminar on Monday night.
You bet, I am too, and I understand you arranged for nice weather for me, so
yes.
Thank you very much. Again, it's going to be a grueling trip, but a great one. We got a lot of very strong information, and again, for all our friends in Toronto, we'll make certain that we send you the DVD, and then we'll see you in the spring. But I wish everybody a wonderful weekend and a very, very profitable day.
And we'll tell Harold to close his ears right now, but to all our listeners in Canada, we won't tell Harold. Most people in Canada go to Florida this time of year, not come here. Although we are going to have nice weather. It's supposed to be +9 on Sunday here in Edmonton, and supposed to be fairly mild during the time that Harold is here. He's going to, I think, a wedding. And where was it, Harold? You're going to a wedding on Friday, next Friday?
Yes, in the Grand Caymans right after. So
well, there you go. So, 0 degrees Celsius to balmy weather. Amazing. To invest in precious metals, the telephone number 1-866-623-2002, wwpmc.com, rarecoloreddiamonds.com, or 1-800-432-1022. That's it, another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.